Go interactive with X-Ray, where we bring trading experts to you live in the platform. Choose sessions, watch live market analysis, and catch up on your favorite market insights anytime. Ask questions and go one-to-one with leading experts on gold, oil, FX, crypto, indices, and equities. X-Ray, your very own analysis team, right at your fingertips. That's higher trading from MarketsX. Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
What's happening, beautiful people? Good day, good morning, good afternoon, wherever you are. How are you guys doing? Let me know how you're doing in the comments box below, guys. How many times did you open a trade and 5 minutes later, nothing was happening? How many times did you close a trade just because the markets weren't moving? And what is the best thing to do when the markets are quiet is the topic today, and I want to share with you one of the trading secrets that I've learned during my career. But first, for the ones of you that don't know me yet, my name is Andrew, and for the last 10 years, I've worked in many retail institutional forex brokerages in Europe. During the past 10 years, I've trained thousands of traders and industry specialists, and the most important thing that I've learned as a trader is patience. Are you guys ready? Let's get started. Don't forget to absolutely like, share, subscribe, and smash that subscribe button. What is the best thing to do when the markets are quiet? Coming up. Right, once again, welcome everyone to today's show. Today I want to talk to you about some things that your account manager and your trading partner most probably didn't tell you. Trading is not that difficult. What is difficult is being disciplined. You don't have to trade every day. Surprised? Don't be. You don't have to trade every day, guys. And there are times in the day or times in the week when it's better to take a step back and observe. I know many traders use a very small time frame when they're trading, and they feel like they have an itchy finger and they feel like they have to open a trade no matter what. Every day, every hour, if they could, 7 days a week, they would trade. That's not how it works. Overtrading can cause tremendous losses. What is there to do when the market is quiet, guys? The answer is very simple. Observe. See what's going on. Now, let's have a quick look at the charts. I'm going to take crude oil WTI for today for this example. And what do you know? If I'm zooming out a bit, I'm going to see that many times throughout the week, the markets are very quiet. The markets are ranging. The markets are moving sideways. Is it worth it to trade on a ranging market? Is it worth it to trade when the markets are quiet? Let's have a quick look. Now, first question is, why are the markets quiet? What is happening? What are the two factors that move the markets, guys? Come on, let's try and remember from the webinar we had yesterday. The two factors that move the price of an asset are technical analysis and the news, guys. Yeah, the economic calendar. So, many times, if you're not using an economic calendar, if you don't know what an economic calendar is, the charts will give you a hint that something is about to happen on the markets. And let's take this example for now. Okay, what happened here? Okay, we're looking at the charts on a 4-hour chart. So every green or red candlestick represents 4 hours, guys. Okay, so we see a bit of tension in the markets. We see a lot of uncertainty. Yeah, we see a fight between buyers and sellers that don't allow the price to move either up, either down. Now, whenever you see the market structure, okay, like this, very likely you're going to have an announcement. Yeah, very likely something big will happen on the markets, and the traders just don't know which way to go. Okay, this is one example, okay, of what is happening with the charts. It's not complicated, is it? So throughout the week, throughout the month, guys, and if we're gonna look at the charts on a lower time frame, yeah, even throughout the day, we're gonna see a lot of quiet times. Okay, what is there to do in times like this? Yeah, so we had quiet time there. Then we saw a breakout. Yeah, we saw a bit of a shake off in the price. Yeah, we saw the price going down for a bit and then shooting up and entering a big uptrend or continuing the uptrend. Okay, then we saw the markets quiet after a rally. Okay, if I extend this square, this blue square that you see there, yeah, we can clearly see that the price fluctuated between 52.22 and 53.83 for a long period of time. Okay, we're looking at a few days, yeah, maybe a week. Now, what is there to do in times like this? Because yes, the concept of trading is fairly simple. Buy when the price is low, sell when the price is high. But what do you do when the market is moving sideways? Is it really worth it to enter a trade? The answer is it might be worth it as long as you're using a bigger time frame, yeah, to plan your entries and your exits. So here we can see that, let's say for about a week, yeah, the price moved up. We're down about $1.50. Okay, it went down. Okay, then it went back up for about $1.50. Then it went back down. Okay, and then the market was very, very choppy. Yeah, if you look carefully, you can see how choppy the market was. It wasn't really giving us any sort of direction, any hint on where the price might go next. Now, some traders, some experienced traders, let's say, will love to trade these swings. Okay, they might take a bit of a risk. Yeah, they might take a bit of chance with it, but they love to trade these swings. Other traders prefer to wait for a breakout. Okay, and what is a breakout? Is that moment when the market literally breaks out, yeah, from where it was before for quite some time. In this case, we see the breakout happening to the upside. Yeah, we can see an uptrend starting. There we go. Okay, we saw the market pushing up, pushing down, but overall, the trend remained healthy. Okay, so we were looking at an uptrend. Now, you're going to see the market taking a break. Okay, and you can see this break illustrated there. Okay, you can see the break illustrated in the other blue square. Yeah, and again, you can see the market having some quiet times. Okay, somewhere up there. Now, these movements can happen before an announcement, yeah, before something big goes on in the markets. Like, for example, every Wednesday, guys, we have the crude oil inventories. Okay, the crude oil inventories, okay, measure how much oil America basically consumed in the previous week, how much oil they have in storage. Okay, so in times like this, traders will take a break. Okay, after the announcement comes out, then they get a clear indication, yeah, clear direction for the price. So what to do in times like this? If you see the structure of the market allowing you to ride the movement for an hour or two or three, it might be worth it. Okay, but many experienced traders prefer to wait for a breakout. Yeah, they prefer to wait for a confirmation. If by any chance you have a trade open, okay, when the market is moving sideways, you're going to see your trade going into a bit of profit. Then a couple of hours later, yeah, or 4 hours later, it's going to go into a bit of a loss, but nothing substantial will happen. Okay, now you can choose to keep that position open, okay, until something happens, yeah, until a breakout happens, or you can try and predict which way the breakout will happen. Okay, using some technical indicators, using some news, some information that you might have handy. Yeah, the economic calendar again is very interesting to use. And based on all these tools that you have, you can decide if you want to enter the trade or you want to wait for that breakout to happen. The moment you get a confirmation that the breakout is happening, then you can enter the trade for a few hours. Okay, now let's take the latest movement in the oil price, guys. Last night we had the crude oil inventories. Okay, if we have a quick look at the economic calendar for Wednesday. There we go. Yeah, yesterday we had the crude oil inventories. The result was better than expected. Okay, the U.S. saw a draw in the inventories of 3.522 million barrels. Yeah, versus an expectation of only a draw of 1.436 million barrels. Now, looking at the charts, okay, we should have seen a big movement. We saw some movement, yeah, and if we were to measure the candlesticks, let's have a quick look at the price, guys. Here we're looking at 58.26, okay, all the way up to 59.89. That's over $1.50, okay? Now, if you decrease the time frame, there we go, yeah, on a 1 hour chart, okay, you can see better the swing that happened in the markets yesterday. Now, many traders will ride this movement up or down. Okay, if by any chance you get caught on the wrong side of the trade, okay, what do we see? The price after the fluctuation will come back to its previous values. So once again, it's entirely up to you if you want to close the trade with a bit of a loss or you want to wait for something to happen in the markets. In this case, for example, okay, my personal opinion, my personal view, okay, it would be to wait for a bit and see what is happening as the volatility is almost non-existent, guys. Okay, if towards the left-hand side we saw some swings, yeah, in the price, as we get towards the right-hand side, as we get closer to the actual price, yeah, which is 59.59 as we speak, we see that the volatility is almost non-existent. So I will decide to wait, yeah, in this situation. Another thing that makes me want to wait is this 200 moving average, yeah, the red line that you see, which is suppressing the price, okay? We can see that every time the price touches the red line, okay, where it exceeds the red line for a bit, it comes back down below the red line. Okay, that is the use of technical indicators and moving averages. Now, I can give you a short explanation why the volatility is almost non-existent there and why crude oil WTI has not moved a lot, okay, after the crude oil inventories announcement yesterday. Basically, the Organization of Petroleum Exporting Countries, okay, and its allies known as OPEC Plus announced that they're looking to boost production, okay, which was suppressed due to the lockdown measures, due to the low demand of crude oil on the market. Okay, they have announced that they're going to increase production by 1 million barrels a day. Yeah, so they're going to produce more. In the same time, we still have the COVID-19 pandemic still causing issues in Europe, in South America, and in India, guys. Okay, so the fear of low demand on oil, alongside with the increasing output by the Organization of Petroleum Exporting Countries and its allies, okay, translates to a lot of uncertainty, okay, in the markets. So what is the best thing to do in times like this, guys? Wait for a confirmation. See what's happening. Try and use some technical indicators. Look at the economic calendar. Try and find out some information, okay, which, if you put together, will probably give you a direction, yeah, a probable direction of the markets. After you find out the probable direction, all you have to do is wait for the markets to react, okay, and position yourself on the markets at the right time to avoid a big drawdown. Okay, this is what you can do in quiet times. Many times you're going to see the markets priced in, guys. What does that mean? The movement already happened, yeah, in the previous day or in the previous days, anticipating an outcome, yeah, some sort of outcome. For example, when the Federal Reserve announced that they will definitely increase or decrease the interest rates, okay, on the meeting they're going to have the following week, okay, or the following month or the following day. Traders already took action, okay, based on the comments that came from the Fed, yeah, the hints that they gave that they will increase or decrease the interest rate. Okay, therefore, traders already traded. Yeah, the markets are priced in. So when the D-Day comes and the announcement is public, not a lot of movement is happening. And why is that? The Fed gave a hint, yeah, out front of what they were looking to do. And traders know the outcome of an increase or a decrease in interest rates by the Federal Reserve. Okay, so Very, very simple. In quiet times, guys, it's not a must to trade. You don't have to trade every day, guys. In fact, some of the most successful traders I've ever met only trade 2-3 times a week. Okay, when they get a clear indication of what's happening in the markets. Now we have a lot of things we can talk about, guys. Today I just wanted to focus on what to do when the markets are quiet. I hope this helps a bit. And if you have any questions, if you need a bit of guidance, guys, feel free to contact us on instructfx.com, info@instructfx.com, or my direct email, guys, thechartwhisper@gmail.com. And now, as a breaking news, let's say for beginner traders, I want to let you know that this is the website. This is me right there. Back in the day when I had a bit of hair left, we do provide free one-on-one mentoring, guys, for anyone that needs it for up to 2 weeks. All you need is an internet connection, a laptop, a computer, and we take care of the rest. Also, if you go on our website, guys, on instructfx.com, you can download the free ebook that we provide that has over 50 pages, okay, with a lot of information, a lot of trading strategies, okay, and a lot of explanation, basically, that will definitely help you. Now, I have one more announcement to make. InstructFX decided to provide the one-on-one mentoring, guys, absolutely free of cost, okay, to anyone that needs it for a period of up to 2 weeks. Okay, obviously, if you need a bit more guidance after that, we are willing to help you with anything that you need. Okay, we're going to have training sessions, one-on-one training sessions. The sessions are about 50 minutes to 1 hour long, so you will learn a lot in that time. And think about it, guys. If you do this for 2 weeks, if you do it 3 times a week, okay, you're definitely going to increase the chances of being successful in the markets. This is it from my side today, guys. Stay tuned. We're coming back live in a couple of minutes with the Markets Pulse pre-US Markets Open. Stay tuned.
Go interactive with X-Ray, where we bring trading experts to you live in the platform. Choose sessions, watch live market analysis, and catch up on your favorite market insights anytime. Ask questions and go one-to-one with leading experts on gold, oil, FX, crypto, indices, and equities. X-Ray, your very own analysis team, right at your fingertips. That's higher trading from MarketsX. Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
Boom, and we're live. What's happening, beautiful people? Good morning, America. Good afternoon, Europe, and welcome everyone to our live stream. Let me know how you're doing in the comments box below, guys. And if you like what you see, don't forget to like, share, subscribe, and support us in delivering more great content. We start the broadcast today with a positive news about AstraZeneca, guys. Its share price rose over 1% today after updates from the United Kingdom and the European medical regulators turned out less negative than fears for its COVID-19 vaccine. Both regulators restated that the benefits of taking the vaccines outweigh the risks, although both acknowledged a possible link to blood clotting disorders. The good news is that after administering over 20 million AstraZeneca shots, the United Kingdom confirmed only 19 deaths that might be related to the blood clots. This being said, let's see what else is happening in the markets today, 8th of April, 2021. Today, we saw the European stock markets continuing to trade to the upside, helped by expectations of a faster economic recovery after the Federal Reserve rests assured of a super light monetary policy for the near future. The stock markets point to a higher open today after closing at record highs once again yesterday. The positivity is accelerated by President Biden's tax plans towards the big tech companies. President Biden stated earlier on Bloomberg News that he's willing to negotiate with the big tech companies in terms of tax plans. The Federal Reserve Chairman Jerome Powell will speak today at the International Monetary Fund Virtual Summit, so we might see a bit of volatility on the US dollar pairs around that time. Crude oil prices continue to struggle below the $60 mark even after the crude oil inventories yesterday, as fears that the COVID-19 waves in India and South America will slow down global demand. And Bitcoin, guys, everyone's favorite, points lower for the second day in a row, giving back small gains once again and trading closer to the $56 mark. Ethereum follows as well. U.S. markets open. Coming up. Right, and we're back, beautiful people. Let's have a quick look at the economic calendar to see what's going on. Remember, guys, two big factors move the price of assets. Okay, technical analysis and the news, which is displayed in the economic calendar. So, for anyone that doesn't know what the economic calendar is your best trading friend, especially if you have a small trading account or if you're using high-risk trades. So, we had quite a bit of news in the economic calendar today. Nothing substantial happened yet. Okay, we had at 1:30 GMT plus 2 today, the European Central Bank publishing the account of monetary policy meeting. Okay, we're going to have the initial jobless claims, which are expected to come out at 680,000. Okay, by consensus on the US dollar in 6 minutes from now, and at 1800 hours GMT plus 2, we're going to have the Federal Reserve Chairman Jerome Powell, speaking at the International Monetary Fund Summit this year. Okay, so not a lot of announcements. That's why the markets were a bit quiet today. However, we do have a couple of very interesting ones. Okay, that will probably shake off the markets later on. Now, let's have a quick look at top 5 things to know in the markets today, guys. Things are happening. Things are very good to know. Number 1 on the board, Biden softens his tax plan. President Joe Biden plans 2 tax companies more are turning out less ambitious than his election campaign promises suggested. The U.S. Treasury related further details of its plans on Wednesday. The 15% maximum tax proposed last week by Janet Yellen would only apply to companies with over $2 billion in annual income rather than the $100 million stated last year. Number 2 on the board, jobless claims due. We saw that in the next 6 minutes, guys. And Jerome Powell's speech is eyed. The latest week's jobless claims data will hit the wires at 12:30 GMT and are expected to resume their downward trend after an unexpected jump of 719,000 last week. Analysts expect 680,000 initial jobless claims to be filled, which would be the second lowest since the pandemic started. The initial jobless claims data have suggested that the pandemic is by no means through in killing jobs across the country, but steady declines in broader measures of continuing claims and the sharp rise in hiring and job vacancies have indicated that the labor market is now clearly building momentum. Number 3 on the board, the U.S. stocks set to open higher today for the third day in a row, guys. U.S. stock markets are set to open higher after 2 days of drift, with the softening of President Biden's tax plans improving sentiment towards big tech names somehow. By 6:15 a.m. Eastern Time, Dow Jones futures were flat, up just 10 basis points. The S&P 500 futures were up 0.3%, and the Nasdaq 100 futures were up 0.8% as well. Stocks likely to be in focus later today include Brewer Constellation Brands, whose outlook will be colored by the expected impact of economic reopening, and food companies ConAgra. The two are both scheduled to release quarterly earnings at 7:30 a.m. Eastern Time. Number 4 on the board, guys, and probably the most important news today, AstraZeneca stock rises even as vaccine fears refuse to go away. Shares in AstraZeneca rose 2.9% in London trading today after an updated statement from the European medical regulators turned out less negatively than some had feared. The European Union and the United Kingdom now both acknowledge a possible link between the vaccine and potentially dangerous blood clotting disorders. Both still argue that the risks of taking it are outweighed by its benefits. The UK's Medicine and Health Regulatory Agency has identified 19 deaths from such blood clots after having dispersed 20 million shots of the AstraZeneca jab. The vaccine has the most advanced orders worldwide of any COVID-19 drug due to AstraZeneca's policy of selling it at cost price while the pandemic lasts. As such, any evidence that it is fundamentally unsafe would be a threat to vaccination campaigns in poor countries. That is all the more important given countries such as India and Brazil are currently experiencing their worst wave of COVID-19 cases. Now, that's very, very interesting, guys. And now a question from me to you. Would you take the AstraZeneca vaccine, guys, considering that out of 20 million doses, only 19 cases are potentially linked to the blood clotting disorder? Would you take the AstraZeneca vaccine if you wouldn't have any other option, or you would prefer to wait? I'm curious about your comments. Drop your comments in the comments box below, and if you drop your comments in due time, I'll do my best to answer if you want to have a chat on this topic. Number 5 on the board, guys. Oil struggles despite inventory reports. Crude oil prices continue to struggle below the $60 mark, amid fears that COVID-19 waves in India and South America will slow the recovery in global demand. Bullish headlines on U.S. crude inventories, which fell by more than expected last week, were also undermined by less encouraging developments in gasoline trends, raising questions about the strength of final demand. Right, now I'll make you a deal, guys. Let's take a 30-second break, run some adverts from our sponsors, and then we're coming back live with the charts of the day and the signals of the day, guys.
Keep your finger on the market pulse with the News Alerts tool. Stay up to date on the latest sentiment across all the major asset classes. Uncover bullish or bearish signals tied to specific assets that could be developing before major price moves, and track how news sentiment correlated with price in the past. Track the news volume on an asset, its fear index, and get a better feel for its underlying strength. All with News Alerts, your central hub for market information. That's higher trading from MarketsX.
Right, and we're back, beautiful people, with the charts of the day from our sponsors at MarketsX, markets.com, which we can't thank enough every day for making this broadcast possible. Now, today I was telling you earlier on that the European markets traded higher. Okay, so we're going to start with the CAC 40 in France on a 60-minute chart, guys, where you see the blue square is the price action 2 days ago. Yeah, so from 2 days ago until today, okay, we see a slight improvement in the CAC 40, currently trading at 6,155.75. We have the German DAX 30, guys, which traded a bit lower today than the 2 days ago. Yeah, and we saw it pushing a bit higher during the European trading session. Okay, there is hope for a recovery, for the German index. And if we're looking at the FTSE 100, guys, the UK FTSE 100, okay, we can see it's a tremendous rally that it had from 2 days ago. Yeah, trading way higher. Okay, around the 6,917.25 mark. Okay, now we're gonna move on to crude oil WTI on a 60-minute chart, guys. $59.63 this afternoon for crude oil WTI. It's gaining a bit as we get closer to the U.S. markets open. However, that 200 moving average that we see there very likely will keep the price pinned for a bit longer. Let's see what's going to happen. If the candlestick formation manages to close above that red line, then probably we're going to look at the potential uptrend if we see a rejection from that 200 moving average, then probably traders will lower their take profit targets to the downside, towards the 58.19 mark or somewhere in that region. Moving on to the most traded, the most liquid currency pair in the world, guys, the euro versus the US dollar is currently trading at 118.81 today, with the RSI stochastic pointing upwards. We saw a retest today on that 50 moving average, which gives us a bit of confidence that the euro might trade higher versus the US dollar. The pound, guys, on the other hand, again, has been dropping on the US trading session yesterday, gained a bit, and then dropped a bit overnight. It traded a bit higher on the European trading session today, 137.67 as we speak. We see the RSI wanting to turn around from the 52% mark, not making it to the overbought levels, which might imply a continuation of the downtrend. We see stochastic pointing upwards, but once again, just like the Euro USD, we see that 200 moving average there acting as a ceiling for the price. So once again, keep an eye on that. If you're going to see a rejection, guys, then very likely the pound will be good to short versus the US dollar. If the candlesticks will push through that 200 moving average and they will settle above the 200 MA, then very likely the pound might be good to buy. USD JPY, on the other hand, is tanking, is nosediving. It tanked on the Asian trading session as well as on the European trading session today. 109.16 for the US dollar versus the Japanese yen, with the RSI and the stochastic way into the oversold levels. There we go. And considering we're on a 60-minute chart, guys, seeing the candlestick moving, it means quite a bit of volatility is happening. Moving on, we're looking at the Aussie dollar, guys, versus the US dollar, which is more positive today than ever. 0.7646 for the Aussie dollar versus the US dollar. We saw it pushing on the Asian trading session. We saw a tiny pullback, and then the push continued on the European trading session, currently trading higher. Stochastic pointing upwards. RSI pointing to a potential pullback after the rally. So don't be surprised if you're going to see the price trading a bit lower. But what traders have in mind right now is this correction, guys. This correction that that's expected to happen for the Aussie dollar. So we saw the drop of the Aussie dollar. We saw the Aussie dollar going sideways for a few days, and now we see the price trading above the 200 moving average. There we go. This is what I was telling you about earlier on. As long as the candlesticks settle above the 200 moving average, guys, then there's great potential to the upside. You can trade it bit by bit, guys, looking towards the left, and marking the average highs, and setting your take profit levels there. Or you could go for the 100% correction, guys. That's another potential take profit target, and the 100% correction, will be measured from this highest peak that we see there. If the market manages to go towards the 100% correction, then probably traders will look again towards the left, at the previous peak. But this might take a week or two, so don't wait for that long, guys. Things might change very, very fast. But this is how it usually works. USD CAD, we see a retest of that 200 moving average to the downside from the US dollar, which has been tanking the entire European trading session, with the RSI stochastic pointing downwards. We're looking at 125.85 for USD CAD this afternoon. Let's see. The US markets open will happen in exactly 1 hour from now, guys. There is potential to the downside for the US dollar. Let's see what's going to happen. Moving on to the S&P 500 and the Dow Jones, guys, the benchmark for the US economy. We can still see that gap hasn't been filled. We see the S&P closing higher yesterday than it opened, marking $4,079.95. And if we're looking at the Dow Jones, guys, we're looking at a very similar trajectory, a gap at the open 2 days ago. A tiny decline yesterday, and the markets closed on the positive side, trading higher around the $33,446.20. Potential to the upside for the S&P and the Dow today, guys. But remember, we have a gap that needs to be filled at some point. All right, now looking at the US dollar index, guys, I'm even afraid to click on the US dollar index and see the price action. There we go, 92.25 for the US dollar index this afternoon, with both technical indicators at the bottom pointing downwards, indicating a bit of weakness, with the price being rejected by that 50 moving average that we see there, that yellow line, and again, way below the 200 moving average. Okay, we saw that dead cross happening there yesterday. There is great potential to the downside for the US dollar index, especially if we bear in mind this amazing rally that happened. Yeah, remember, whatever goes up must come down. Whatever goes down must come back up eventually. Right, what do we know? If the US dollar goes down, gold price is shooting higher, guys. $1,747.90 for gold futures this afternoon on investing.com on a 60-minute chart. We saw gold doing very, very well on the European trading session and pushing higher. It gained from 1737. It gained exactly $10, okay, since this morning. Now we see a red candlestick. Probably we're going to see a retest, of that 50 MA as once again, RSI stochastic are turning around from the overbought levels, guys, but no reason to panic. Okay, it's absolutely normal that after a rally of $10 or a rally of 8 hours, okay, some traders will close their buy positions, cashing in the profits. And that will cause the price to come down for a bit of time. Okay, and then if the trend is strong, then we're gonna see the uptrend continuing. So far, if we're going to see this this level, the 1745, the 1750, let's say, with a push broken, then to the upside, then probably traders will set their take profit targets there, around the 1770 level if they want to trade it bit by bit, or why not a bit higher, around the 1815, okay, or even the 1800 flat. Okay, there is potential to the upside for gold, that the same gold that has been dropping for quite some time now. If we look at the gold price on a 4-hour chart, guys, we can see the gold price started dropping on the 6th of August 2020, and it did not recover since. We have a long way to go. At that point, gold was trading at $2,068, $2,071 an ounce. Okay, if anyone manages to catch this upward trend and ride it for a month or 2 or 3 or more, guys, we're talking about potential tremendous profit. Let's see how silver is doing. We see a retest of that. No, we see the price settling above the 200 moving average. Okay, silver is trading at 25.43. RSI stochastic indicate a bit of a correction. Okay, again, after a decent rally. Okay, at least a 10-hour rally that we see in silver futures today. Okay, a bit of a pullback is expected, but again, don't be worried, guys. It's absolutely normal. Now, let's have a quick look at Tesla, so you don't say I'm a mean person. Which is currently trading at $670.97. We see the price closing the gap. This is the gap that we see in the left-hand side. And we see the price now closing the gap. We see a retest of that 50 MA, RSI stochastic, both pointing downwards. Okay, we might see Tesla share price going even lower, okay, towards the $600 mark, okay, today or in the next couple of days. And now everyone's favorite, guys, the good almighty Bitcoin keeps dropping in the last 24 hours. It's currently trading at $57,188. Okay, we see a bullish candlestick there. But in the last couple of days, guys, or this week, I'm tempted to say, we can see Bitcoin dropping and dropping and dropping. The price moved below the 200 MA, which indicates quite a bit of selling power on the market. So let's see what's going to happen from here. We might see a retest of that 200 MA and then a rejection to the downside, okay? Or we might see the candlesticks settling above the 200 MA, which usually implies a bit of buying power. Ethereum follows as well. Okay, we see a sharper drop on Ethereum, followed by some people would call a ranging market. A bit of uncertainty there in the price. Okay, and as we speak, we see Ethereum trading once again at $2,000.21. No, $2,021.42. Sorry. Okay, and heading towards the upside. Okay, the very, very important level for Ethereum traders, is that level, the all-time high, the 2,128 or somewhere there in that region. Okay, as we saw, a double top, a triple top there, followed by a bit of a meltdown in the price. Okay, so don't get overexcited if the price will rally a bit. Keep an eye on the previous high, guys, and if you're going to see a breakout from there, okay, then you know what you have to do. You might see a rejection from there in the same time. Now, let's have a quick look at the signals of the day. Sorry, guys. Let's have a quick look at Ripple as well. Let's see how Ripple moved in the last few days. Okay, Ripple is currently trading just below $1, 95 cents for Ripple. We see the price well supported by that 50 moving average. Okay, the price seems supported by the 20 moving average as well. So don't be surprised if you're going to see Ripple shooting once again to the sky along with the Bitcoin and Ethereum. Okay, RSI is trading somewhere in the 50% mark, above the 50% mark as we see, still pointing upwards. We might see a bit of a rally in cryptocurrencies this afternoon. It all has to do with the US markets open. Now, signals of the day, guys. Remember, we are 45 minutes ahead of the US markets open. Okay, America is expecting a positive open for the S&P and the Dow and the Nasdaq this afternoon. Euro USD, 4 strong buy indications on all 4 time frames. We see the pound versus the US dollar with 3 buy indications and strong buy indications. The daily remains a sell though. USD JPY, USD CHF, strong sell on 3 and 4 time frames. The Aussie dollar, just like the euro, seems to be strengthening, guys. The euro started strengthening versus the pound. I don't know if you saw the trading signals changing a few seconds ago. Strong buy indications on a 5-minute, 15-minute, and daily. Okay, weakness in the USD CAD pair. Strong sell indications on 3 out of 4 time frames. The Kiwi dollar is strengthening against with the Aussie dollar versus the US dollar. And then we see the Euro JPY, Euro CHF, strong sell. And we see the GBP JPY and the GBP CHF with strong sell as well. Right, let's have a quick look at commodities, guys, this afternoon. See what investing.com thinks about commodities. All right, there we go. Okay, short term, we see just a shy sell on gold, followed by 3 strong buy indications. We see a neutral for silver, followed by 3 strong buy indications. Therefore, we're looking at a bit of weakness in the dollar, guys. When gold and silver start trading higher, then we're going to see the US dollar trading lower. Copper indicates a strong sell on a 5-minute chart with the daily remaining a strong buy. So pay attention after the US markets open. Nothing is really happening with crude oil, WTI, and Brent oil. Mixed signals. Natural gas is indicating a sell, followed by 3 strong sell indications on all 4 time frames. And the US wheat, guys, is indicating just a shy sell on a 5-minute chart, followed by 3 strong buy positions. What does that mean? We might see a bit of a correction, guys, followed by a rally, to the upside. Right. This is it. This is what's happening in the markets today. This is it from my side, guys. And before I forget, I keep telling you every day about the trading signals that our sponsors at markets.com provide straight on the trading platform. This is their web trading platform, guys. It's amazing. And, okay, here you have the trading signals, okay, on this section, and you have another section, guys, where you get a lot of trading courses. Occasionally you're going to see these live broadcasts there on the platform as well. Okay, you can choose to see a financial commentary, regarding the major assets. You can choose to see more trading signals, okay, on more assets, and they even give you the source, and the direction. Okay, bullish means up, bearish means down. Very interesting tool which traders could use in their advantage. This is it from my side today, guys. Tomorrow is Friday. Yay! The weekend is coming. Can you feel it? So can I. Join me again tomorrow, same time, same place, for a new round of market talks. And until then, remember to trade responsibly and may all your trades be in